What's going on, guys? Welcome back to another very exciting video. In this video, we're going to be taking a look at Alibaba. And Alibaba had a recent leak about their AI chatbot technology. So what we're going to do is we're going to take a look at that technology, how it could implement and improve the underlying businesses. And then we're going to jump into the split between the 6 different businesses that Alibaba proposed around a week ago and take a look at the revenue of each of those business units and the compound growth over time and how the valuation of those businesses could really change with this split. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. In terms of the stock price, Alibaba has been very volatile. And we've seen that over the last couple of years as Alibaba has traded up in very significant ways in short periods of time, but also down in very significant ways in very short periods of time. And that really comes down to investors having trouble valuing the company. And the split between the business into 6 different units is really proposed to help investors really value the business correctly for each of those different units. So we can see here today, the stock moved up over 4%. But if we look at the last 5 days, the stock has experienced a lot of volatility, but still has traded basically sideways. So we can see Friday into Monday, the stock actually moved down over almost 4.5%. But then Monday into Tuesday, we could see that the stock kind of traded sideways in there and actually traded up around 3%. And then from Tuesday into Wednesday, the stock traded down another 2.5%. And then Wednesday into Thursday, we have a 5% upward move. And right now, Alibaba is in one of its upswings. We can see that the stock over the last 6 months is up over 25%. But back in January, it peaked out around $120. Since then, it dropped over 30% to around $82. But now we are seeing this upswing where it's gone from $82 all the way up to where it's kind of sitting at now of $102, which is a 25% move up in the stock price. And a lot of the volatility in the stock price is caused by 2 things. One, the investors that still have question marks around whether China is investable. But 2, there are headlines like this that are coming out about Alibaba and the business in a very positive light. And this is Alibaba's AI technology potentially being released here in the next month or 2, as a blogger supposedly got access to some of the technology by accessing their smart speaker and finding that the AI technology was already released on their device. Alibaba stock is enjoying a strong market day on new reports about its entrance into the artificial intelligence game. According to the Chinese news outlet Pan Daily, a blogger has discovered a leaked version of Alibaba's chatbot inside its Tmall Genie smart speaker. And back in February, it was announced that Alibaba was working on its own AI chatbot, akin to OpenAI's now famous ChatGPT. So overall, I don't know how much different this is from technology like Alexa. When you think about it, if you go home and you have a Amazon smart speaker and you could talk to Alexa and have them order groceries, play music, play YouTube videos, whatever it may be, obviously there is some sort of technology in there that is allowing the Alexa to recognize your voice and execute a command based off of what you're asking it to do. I would guess that Tmall's Genie is going to be similar to that, where you could go home and basically order a, whatever off of Alibaba. And that is going to be good overall for the business because it is going to create revenue that wasn't there previously. But I don't know how much of an innovation this really is compared to technology that's here already in the US. But one good thing to keep in mind with companies in China is they are not competing against Google's, Microsoft's, Amazon's. They can actually come in and basically steal the technology from those large US companies. They don't have to do any of the R&D and they can just implement it into their businesses. Because China restricts a lot of these US-based businesses from doing business in China, companies that are already existing in China can basically just take those technologies that are already developed in the US and implement them within China without having to spend the large amounts of money on R&D and technical research. However, Alibaba may not be stealing these other companies' technology. They may actually be developing their own technology. Here we can see that according to early reports, out of the 15 questions, 10 of the AI's responses were considered better than its competitors. That is obviously a very broad comment, better than its competitors. Who are they competing against? And really, what were the questions that were asked? Those are 2 things that aren't really specified in this article, but it does allude to the point that Alibaba could be developing its own technology that is actually competing better than a lot of the other products out there. So what I wanted to do in the back half of this video is go over this article by Seeking Alpha that's titled Alibaba Valuing the 6 New Companies to Assess True Unlocked Value. They have a very good breakdown of these 6 businesses, their revenue, their compounded growth rate, and basically what the overall value looks like. So we're going to jump into that here right now. The first thing up here is Alibaba as it stands right now. So Alibaba as it stands right now has experienced a compound annual growth rate of 40% 45% from 2012 to 2022, reaching $134 billion for its latest fiscal year. Over the last 5 years, Alibaba has experienced an operating margin of 16.3% with a median return on invested capital of 9.73%. It has also grown its free cash flow from $737 million in 2012 to $5.3 billion in 2022. Sadly, in the last 9 months of fiscal year 2023, Alibaba's revenue declined 5.3% year over year. However, Alibaba still has a very solid net cash position of $48 billion and a debt to equity ratio of 0.17. Their e-commerce and their cloud businesses are the most impressive. When we look at their e-commerce business, the revenue has gone from $544 million in 2010 to $92.3 billion in 2022. This is an astonishing CAGR of 53.4% with an operating margin of 33.8%. It is obvious why Alibaba is holding on to this part of the business completely. The cloud business is their fastest growing business. However, they will only hold a portion of this company, and it has grown to $11.6 billion in 2022, which is a CAGR of 69.21% since 2010. The logistics business is another fast grower. It has grown at 62.86% since 2019, from $1 billion to $7 billion. Their global digital commerce business has grown at a slower rate of 30.68% since 2010, reaching $9.5 billion. However, this business is poised to continue to grow as it is positioned in a lot of emerging markets in Southeast Asia. Their local services business is a money loser as it is operating at a margin of minus 70% in 2022. This is the business that basically runs their food delivery as well as their online travel agency. And finally, their digital media and entertainment business has experienced a growth rate of 41.5% since 2016 and currently has revenue of $5 billion. And according to this article, Alibaba pre-split has a value of $149 per share, while post-split it has a value of $209 per share. So with all of that said, I am a believer in Alibaba. I think for the long term, especially over the next 3 to 5 years, I think we are going to see Alibaba continue to grow. I think their business is going to continue to grow. We've seen over the last couple years that China has had a lot of lockdowns, and that has really stunted a lot of growth within China. And I think as they start to turn this corner, they're going to come out of those lockdowns, and I think investor confidence is going to be restored within China. So keep in mind, that is all my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and making sure that the risk that is associated with that company is adequate for your type of risk tolerance. Alibaba is a company that does have a lot of volatility, like we went over in the beginning of the video. So it's important to make sure you understand what that means for the company and for your position sizing. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.